Welcome to The Explainer. Today, we're going to crack the code on stock charts. Seriously, we're going to look past all those squiggly lines and learn how to read the pretty powerful story they're telling us. You know, if you've ever stared at a stock chart and felt like you were trying to decipher ancient hieroglyphics, well, you are definitely not alone. At first glance, those peaks and valleys can just look like a bunch of chaos. But what if I told you there's a language hidden in there?
And by the end of this explainer, you're going to have the basic tools to start decoding it all. So here's the game plan. We'll talk about the story charts are telling, learn the language, spot some key patterns, see why volume is so crucial, and then wrap it all up in your new toolkit.
Okay, let's dive right in. First things first, when we're looking at a chart, what are we actually trying to do? What's the big picture goal here?
Well, what we're doing is something called technical analysis. And really, at its heart, it's not about having some magic crystal ball. It's about using what happened in the past to get a glimpse into the market's psychology. You know, that collective wave of fear and greed that drives every single trade.
So, to read that story, you've got to learn the language first. And the language of charts starts with one simple fundamental building block, the candlestick.
You can just forget about those simple line charts for a second. The ones that just connect the dots of closing prices. Candlestick charts, that's where the real drama is. Each and every candle packs in a ton of information. The open, the close, the high, and the low for a certain period. This gives you a way richer picture of the battle raging between buyers and sellers.
And the colors basically tell you who won that battle. A green candle, we call that bullish, means the price closed higher than it opened, so the buyers were in control. A red or bearish candle means it closed lower. The sellers took that round. And those little thin lines sticking out, the wicks, they show you the entire journey the price took during that time.
All right, next up are two words you're going to hear all the time: support and resistance. Just think of support as a price floor. It's a level where buyers tend to show up and say, nope, it's not going any lower. And resistance is the exact opposite. It's a price ceiling, where sellers usually step in and start to take their profits.
Now here is where things get really cool. These roles can totally flip. Check out this chart. When a price smashes through a resistance ceiling, that old ceiling often becomes the new support floor. It's a super important dynamic to keep an eye out for.
Okay, so once you get candlesticks and you can spot support and resistance, you can start to see the bigger picture. You can actually start recognizing common storylines or patterns that pop up over and over again. First up, we've got reversal patterns. I want you to think of these like a big plot twist in a movie. Now, nothing's ever a guarantee, right? But these patterns are a heads up that the current trend might be running out of gas and is about to change course.
The head and shoulders is an absolute classic. Basically, you see buyers try to push the price up 3 times. The first push is the left shoulder. The second one is even stronger. That's the head. But that third push, the right shoulder, it's weaker. It shows that buying momentum is fading. And when the price finally breaks below that neckline of support, it's often a sign of a shift from an uptrend to a downtrend.
Then you've got double tops and double bottoms. These are so simple, but they're incredibly powerful. It's basically the market trying to break through a key barrier twice and failing. A double top hits that resistance ceiling twice, suggesting a potential turn downwards. A double bottom, it hits the support floor twice, signaling a potential move back up.
Okay, the second type of pattern is called a continuation pattern. These aren't plot twists. They're more like a pause for breath. They signal that the market is just consolidating for a bit before the original story continues on its way.
Triangles are a perfect example. You'll see the price action get squeezed tighter and tighter, like a coiled spring. An ascending triangle with those rising lows, that shows buyers are getting more aggressive, and it often leads to a breakout to the upside. A descending triangle with its falling highs shows sellers are in charge, and it usually breaks to the downside.
So, you spotted a pattern. Great. But how strong is it? How convincing is that signal? Well, that's where you need to learn how to read the room by looking at trading volume.
To put it really simply, volume measures conviction. It's the raw number of shares changing hands. High volume tells you there's a ton of interest and participation behind a price move. Low volume? That suggests people are uncertain or maybe just don't care.
And this is absolutely crucial. A pattern that breaks out on high, surging volume is a powerful, much more reliable signal. It's like the market is shouting its approval. But a breakout on low, weak volume, that's more like a whisper, and you should probably be a little skeptical.
But hey, don't get tunnel vision here. Relying only on volume is a classic mistake. A price jump on low volume might just fizzle out, and a huge one-day spike could just be a knee-jerk reaction to some news. Just remember, volume is a confirmation tool, not a crystal ball all on its own.
All right, we have covered a ton of ground on our little code-breaking journey, so let's put it all together and look at the new toolkit you have now. Seriously, think about what you can do now. You can look at any chart and read the story of the individual candlesticks. You can spot those key battlegrounds of support and resistance. You can identify potential trend changes with reversal patterns, or see when the market's just taking a breather with continuation patterns. And most importantly, you can use volume to get a real sense of the market's conviction. And look, this isn't about predicting the future with 100% certainty. Nobody can do that. It's about understanding the probabilities. It's about reading the story the market is telling you right here, right now. You have a powerful new lens to see through. So the only question left is, what story will you see?